afternoon, ladies and gentlemen. I'm Pelcia, moderator for the conference call. Welcome to ONGC's earnings conference call for quarter ended 30th June 2025. We have a team today, Vivek Tongaonkar, Director of Finance, ONGC, and team who will interact with investors and analysts to discuss Q1 earnings. As a reminder, all participants will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone telephone. Please note that this conference is being recorded. I would now like to hand over the floor to Vivek Tongaonkar for his opening remarks. Thank you, and over to you, sir.
Yeah. Good afternoon, ladies and gentlemen. I am Vivek Tongaonkar, Director of Finance, ONGC, and I welcome you all in this ONGC's earnings call for Q1 financial year 26. Thank you all for joining us on this call. I am joined over here by my colleagues from ONGC, Ajay Kumar Singh, he is Chief of Corporate Planning, Mr. Yogesh Naik, he is our Chief Corporate Finance, Akhilesh Tiwari, he is our Head Corporate Accounts, Prakash Joshi, and Anand Kukreti from our Investor Relations cell. We also have Mukul Bhatnagar and Basant Pasari from ONGC Videsh Limited. ONGC has compiled its financial results for the quarter ended 30th June 2025, which have been reviewed by the statutory auditors. The financial results have already been released on the 12th of August 2025 through a press note and sent to the stock exchanges. This has also been sent to the analysts who are there on our mailing list. A brief synopsis of the results follows. The company has earned a net profit after tax of rupees 8,024 crore during Q1 financial year 26 as against 8,938 crore during Q1 FY25. It's a decrease of 914 crore, about 10.2% decrease. This decrease in net profit during Q1 26 is mainly on account of lower crude price realization. The crude price realization was $66.13 per barrel in this current quarter against USD 83.05 per barrel in Q1 FY25. Accordingly, the sales revenue in Q1 26 has decreased on account of lower revenue from crude oil. The decrease is about 4,047 crores, and value-added products also is lesser by 409 crores, which has been set off by increase in natural gas revenue by 1,083 crore rupees as against those corresponding quarter of the previous year. Increase in natural gas revenue is due to increase in ceiling price of nomination gas from $6.5 per MMBTU to $6.75 per MMBTU and additional revenue from new well gas sales. The incremental revenue from new well gas during Q1 FY26 is approximately 333 crores. During Q1 FY26, the expenditure on account of statutory levies was 6,073 crore as compared to rupees 9,772 crore for Q1 FY25. So this is a decrease of rupees 3,699 crores, about 37.9 or 38% decrease. This is mainly attributable to abolishment of SAED on crude oil, which was effective from 2nd of December 2024. So this SAED amount was about 2829 crore in Q1 FY25. There's also a decrease in average selling price of crude oil from rupees 51,768 per metric ton in Q1 FY25 to rupees 42,593 per metric ton in Q1 FY26. In Q1 FY26, operating expenses stood at 5,577 crore against 5,182 crore in Q1 FY25. There was an increase in contractual payments by 313 crores. These were driven primarily by higher FPSO full day rate charges, which was about 191 crores at KG 98/2. Also, raw material consumption costs increased by 265 crores quarter-on-quarter basis, and this was due to the increase in LNG consumption cost mainly at Dahej C2, C3 plant, which was amounting to 244 crores. The depreciation and impairment cost for Q1 FY26 stood at 6,531 crore rupees as against 5,897 crore rupees during the corresponding period of the previous year. So this was an increase of 634 crore rupees. This increase was mainly due to depletion expenditure of 211 crores. Out of this 211 crores, 174 crore depletion expenditure was at KG 98/2. This was due to the cumulative impact of increase in carrying value of ONGC or oil and gas assets. Increase in depreciation by 393 crore was mainly at Western Offshore. There was also due to the addition of 259 crores of ROU assets, which was related to hiring of additional vessels at offshore. At the consolidated level, the company has earned a higher net profit, a profit after tax of 11,552 crores during the first quarter of FY26, as against 9,776 crores during the first quarter of FY25. This is an increase of 1,778 crores, about 18.2% increase, and this increase has been primarily additionally because of HPCL. During this quarter, again, we have increased the crude oil production. ONGC successfully reversed the crude oil production decline of in Q4 FY24 and continues to increase production quarter-on-quarter basis for the past 4 to 5 quarters. The standalone crude oil production during Q1 26 was 4.683 million metric tons, with an increase of 1.2% over Q1 FY25. Standalone natural gas production was almost flat at 4.846 BCM in Q1 FY26 as against 4.863 BCM in Q1 FY25. ONGC has also declared 2 discoveries during FY25 for Q1 F26 in its operated acreages. Out of these discoveries, Vajramani is a prospect discovery in Mumbai offshore, and Suryamani is a pool discovery at Mukta Formation in Western Offshore. Gas from new wells continues to be a key contributor, with revenue from new well gas reaching 1,703 crores in Q1 FY26. This has delivered an additional 333 crore as compared to the APM gas price, as the gas from these new wells is eligible for a 20% premium over the domestic APM gas price. The price for new well gas was 8.26 MMBTU and for nomination gas was 6.64 per MMBTU. ONGC is actively working to boost output of its new well gas. Now, with the TSP, technical service provider, already in place for the MH field, more sharper focus on deep water and ultra deep water exploration, expediting monetization of new hydrocarbon discoveries, expanding the enhanced oil recovery initiative, and commencing additional production from upcoming projects currently at various stages of development. I am confident that these efforts will help offset the decline in production from placing us in a stronger position in the coming quarter. With this, I finish my briefing for the first quarter results for financial year 25-26. We will be happy to field any questions from you, and we would request you to kindly restrict your queries on financial results only. Thank you very much.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask questions. If you would like to withdraw your request, you may do so by pressing star and 1 again. The first question comes from Prabhasan from ICICI Securities. You go ahead.
Yeah, good afternoon, sir. Thank you for the opportunity. I had a couple of questions. Firstly, as far as the production is concerned, you did mention that crude production has sort of stabilized and is starting to increase. So, what is the exact production level from the KG asset at this point of time, and what is the exit rate guidance as of now?
For the KG asset, you are So currently from KG asset, we are producing 30,000 plus barrels of oil per day, and the gas is about 3 MMSCMD.
Okay. And for any...
Sorry, go ahead. And as far as the projections are concerned, we are expecting that the production should ramp up from January, February onwards. I'm talking only about the KG basin as of now. And the gas also should move up to 6 to 7 MMSCMD by January.
In FY26, we should ideally exit it at maybe slightly higher oil and 6 to 7 MMSCMD of gas output. Is that a fair way to look at it?
Yes.
Okay. The second question was with respect to the TSP, the technical service that you just mentioned. Any progress you can share or any granularity in terms of timelines of when we can start to see some of the incremental production, which was sort of, guided to?
Yes. Already the teams are in place. As we had mentioned that from April onwards, all the teams, both from BP as well as from ONGC, have started working together. They are, the work has started. They have started looking at the various data that is available for MH field. We do expect that something tangible should start coming up from the fourth quarter of this year, from January 26 onwards.
Fourth quarter of this year, we should start to see the results. Yes. And last question, if I may, sir, with respect to OPaL, thanks for sharing some additional data that you've done as part of the information. I just wanted your sense of what impact, higher amount of methane could have in terms of our input costs, the arrangement that we are looking to do to sort of build, VLECCs and import methane directly. What kind of impact do we see on our profitability once we start sort of consuming or switching to ethane in a larger way for this plant?
So basically that ethane usage will start from 28 onwards only. Currently we are extracting using LNG for that extraction of C2C3 portion. However, once the contract with Qatar gets over in 28, we are looking at de-risking this project by tying up ethane supplies. And the best way to do this thing is ensuring that the supply is steady, for which we are planning to have our own ships for transportation of ethane. It's cheaper. And this comes out to be cheaper because most of the ethane is normally available from the US, which is linked to Henry Hub. So we do believe that the landed cost over here should come out to be cheaper than what we have today.
How much of ethane requirements will be there, sir, at full capacity for OPaL?
600 KTPA. It will be 600 KTPA per annum, that is kilotons per annum.
600 KTPA. And just one last follow-up. Do we expect to hit EBITDA break-even in this year? Are we guiding to that effect?
First quarter itself we are EBITDA positive, and we are hopeful with the measures that we have taken. And now that the plant is also running more than 90% capacity, we should end the year with a good performance.
Great, sir. Thank you so much for answering the questions. I'll come back if I'm all the best.
Thank you. The next question comes from Amit Muraka from Access Capital. Please go ahead.
Hi, thanks for the opportunity. So just on your production volume, so there is marginal uptake in crude the volume as you highlighted. So which field would it have come from? And also on BP, as you said that the engineers are working on it, but if you could just give some guidance on volume uptake on that from that would be great.
So first as far as if any particular production there has been an uptick, no. It has been general all across. There have been different areas in which we have got marginal increases in crude oil production as such. We are expecting, as I've already mentioned, that from KG Basin we should have much further increase from January, February onwards for both crude as well as gas. As far as TSP is concerned, the work has initially started now. The initial work would be more to do with interpretation, going through the data, and then suggesting what actions need to be taken. which would take some time for the actions to be completed. However, we do expect that we should see some impact upon production from the fourth quarter of this year. So as of now, there is nothing concrete on the ground as far as to report, but yes, things are moving in the right direction, and that's why we are hopeful that on the fourth quarter this year, we should have some results or benefits of TSP visible.
Okay. And then the government project is on track for Q4, I think it was guided earlier.
Yes, it is on track, very much on track, and we do expect that this coming year, fourth quarter, we should have production coming out of.
Got it. Thanks a lot.
Thank you.
Thank you. I request the participants to visit the 2 questions in the initial round and join back the queue for more questions. The next question comes from Vivekanand from Amber Capital Private Limited. Please go ahead.
Yes, thank you for the opportunity. I have 2 questions. One is on the KG-D5 EP production guidance. You had earlier said you will reach 45,000 barrels per day peak oil production and gas 10 MMSCMD. Would you be willing to share an update on the timelines when you reach peak production in KG-D5? That is question 1. And secondly, could you refresh us with your guidance for FY26 and 27 hydrocarbon output, both oil and gas separately if you can? Thank you so much.
Yeah. So as I mentioned, for KG-98/2, our guidance would be for the fourth quarter of this year. We should move ahead beyond 30,000 what we are producing just now. We were to have this earlier on during this quarter itself. However, because there was vessels not being available for that installation of living quarter, this got delayed, and due to monsoon setting in, it was not possible to do the work. So it will now get shifted to winter, which is happening sometime in November, December, and that's why by January, February, we should have this production coming up. Gas also, we have said that 10 MMSCMD should come up from now the fourth quarter onwards, starting off 6 to 7, and then moving up to 10 MMSCMD. Once the wells that are opened up and connected through that living quarter platform stabilize. Coming to your second question of what is the production levels for 26-27. For oil, crude oil, we have 21 million metric tons. Guidance on gas for 26-27 is 21.487 BCM. So the total would come out to 42.50.
Right.
And
just one piece.
Yeah. Bolliye.
No, my current year was on the current year also. Yes, thank you.
Yeah, sorry. For the current year, we have crude oil at 19.928 and gas at 20.110, which is 41.04 in totality.
Thank you very much.
Thank you.
Thank you. The next question comes from Adhishi Rathi from JP Morgan. Please go ahead.
Yes, thank you so much for the opportunity. So my question is regarding the OVL performance. I see that the volumes have remained almost flat on Q, but the revenues are substantially down. So could we have some color on that?
Mukul, can you just add on to it?
Volume terms, yes.
Yeah.
Can you hear me? Volume terms, yes, sort of flattish. Because of the Russian impact, the geopolitical impacts, the Russian assets have been impacted in terms of production. And we have been almost stable. The oil production this quarter was in the same range as in the last quarter, with a difference of about 2%. As far as our operated assets are concerned, we are doing well. We have increased production in South Sudan. In CPO-5, we are doing pretty well. But the revenue is largely impacted by the crude price realization, because our average realization has come down from 67 to 60. That also has a Russian angle.
Right. So, but if I look at on a standalone ONGC, first ONGC, I see that the revenue was basically down only 9%. Whereas for OVL, it's almost down like 64%, which is, which I'm trying to figure out. If the realizations have come down, ideally the impact, even if we take into account the mix, it shouldn't have come down that much. So is there something that is missing?
No, just to share, there is some kind of change in the arrangement related to the sale in one of the projects. So what has happened earlier, we were selling the entire product and it was getting recorded as revenue in the books of ONGC Videsh. Right now, that sales is not coming to us. Instead, we are getting that entire profit from the JV. So earlier we were selling on behalf of JV, that was getting recorded as revenue.
Now it is not coming to us, so that arrangement has changed. That's a significant impact. Almost 900 crore plus of revenue that was there in the last year is not there in the current year.
Understood, sir. Thank you so much.
Thank you, sir. The next question comes from Varadarajan Shivashankaran from Antique Stock Broking Limited. Please go ahead.
Thanks for the opportunity, sir. I wanted to understand this new well gas. So currently, the level at which we are, how often does it get reviewed, and when should we expect the next review, and what kind of a quantum?
See, this price is revised every month. Reviewed every month. The fund gets reviewed every month. Revised every 6 months.
So, when will be the next review? Sometime around in the next 2-3 months?
Just hold on for a second. Yeah, your quantity gets projected monthly also, and monthly accordingly that quantum gets decided. And pricing is based upon the gas pricing, whatever that APM price ke upar wala Indian basket 20% upon 12% on the Indian basket, which gets revised every month.
And any update on Mozambique if you have?
Every month. What update on?
Mozambique.
Yeah, Mozambique currently still in force majeure, but we are expecting that since there has been very substantial improvement on the ground. We are expecting August, September this FM to be lifted. Already Total is in talks with the government over there. We have also had talks with all the partners, and actions have been initiated to start the operations over there. So we do expect that very shortly, maybe in a month's time, we should have work up and going and the force majeure withdrawn from that.
Thank you a lot.
Thank you. The next question comes from Mayan Mestri from Morgan Stanley. Please go ahead.
Hi, sir. Thank you for the call. My question was more related to the operating cost itself. I think if you look at on a per unit basis, your operating costs are still tracking higher. If you look at YOY basis on a long cycle last 3-year average basis, any chances of this kind of coming down, considering you have been highlighting focus on the cost side in the last call? So is there a view here that you can share with us?
Yes. So the increase, as I've mentioned earlier, was that mainly because of the hiring charges that have increased as far as the FPSO was concerned on the East Coast. When you compare on quarter-on-quarter basis, during this current quarter, the FPSO was working at full capacity, and therefore the price or the rate that was being charged was the full rate. In the previous year, Q1, the FPSO rate was lower because it was not fully being utilized. It was at that time 70% was the rate, which subsequently from October onwards became the full rate that was being charged. So that was one aspect that comes up. Secondly, for OPaL, we supply C2, C3 through our C2, C3 plant. Now, since OPaL is now working or is full steam ahead, we have been providing more LNG also to them, and because of this, the purchase of LNG has also increased. Processing of our gas has also increased over there, and this has led to the increase in the cost. The focus on cost reduction remains. We have been starting to cut down upon our costs also. There have been decreases in other expenses, and transportation expenses, etc., have also come down. What has increased is in sync with the quantum of production increases that have happened. So the focus remains upon cost control. However, if there is production increase, there is going to be the production cost also moving up accordingly. But there have been a number of areas in which we have been able to reduce the cost also. Like insurance, where we have cut down on the cost. There has been a decrease of about 15% in insurance expenses. We have also cut down upon some of the repair and maintenance costs also. So this is work in progress always, and this is going to help. Very clear, sir. Very substantially, we have been able to reduce our manpower costs also. Partly because, yes, there have been retirements in the company. Hello, am I audible? Yeah. We have also taken measures to reduce our operational costs in another method. If you see for the western offshore, our fields spread out from right from below Mumbai side to right up to the Gujarat coast. So we have been earlier operating from Mumbai only. All our sorties or all our dispatches for cargo etc. have been from Mumbai, Nhava Sheva port. Now we have taken up Pipavav port. Which is closer to the northern side of this sea, and by using that port, we have started to cut down on the cargo or the transportation cost. We have also started utilizing Surat Airport for our sorties for manpower deployment. So it cuts down a lot on the time as well as the sorties that are there. So these cost reductions will get translated over this year, which should be visible subsequently.
No, very clear. I think thank you for the detailed explanation.
And during the fair weather, sorry, there's something.
Yeah, go ahead.
During the fair weather, we are also using crew boats, which reduces the cost of transportation of people from shore to the offshore. It reduces the number of sorties, helicopter sorties that we have to, which are much more expensive, and it also reduces the risk that the people our employees and contractual employees face while going to offshore. So all these measures will translate over the course of the year into lesser costs as far as operations are concerned.
So just an extension of this, correct? Is there a guidance you want to kind of give us into the end of the year where your OPEX per barrel could kind of sit, or whether you see a 10%, 15% reduction with all the things that you kind of highlighted very clearly on a per barrel basis where your cost could kind of sit? Considering there could be some impact coming in also because of some of the rig costs, etc., kind of shifting lower as well, I'm assuming. So is there something that you can guide us on that?
In the first quarter, we will not be in a position to do that guidance. We were thinking on this issue, but then we would let bit more time flow because the power has come very recently. We have not yet stabilized those operations. We have also not shifted most of our operations from Mumbai, only partly they have shifted. So by within a 6-month period, by maybe October, November onwards in the fair season, we should start making more use of the power as such, as well as for the crew boats. So then the cost would start appearing, how much are we going to save on it.
Okay. So the last question was on OPaL. You are running now at close to around 90% utilization rate. You think, I think because most of the other assets in the country are running closer to 100 or above, sometimes even above 100. You think with your performance in OPaL that you have been now scaling up, you think that's something that you can kind of get to going forward?
Yes. We are very hopeful, or very rather, we are aiming to do that. That should be closer to 100 or even try and cross.
Correct. Yes, thank you.
Thank you. The next question comes from Puneet Gulati from HSBC. Please go ahead.
Yeah, thank you for the opportunity. My first question is, for gas production has been delayed a bit. Do you understand the risk in ramp up, and what would you attribute as the main causes for slight delay in the gas ramp up, especially the KG Basin side?
Yeah. So for the KG Basin, that production could not happen because our living quarters got delayed. Living quarters module that got delayed, and because of which we are not in a position to tie up our gas wells which have already been drilled, and they need to be connected and gas supply should start. So once that happens, as I said in the winter season, November, January, February, we should have that gas coming up from.
Okay, and that living quarter is yet to be tied up?
Yeah, it is to be installed as yet. It is fabricated, everything is ready. It has to be brought to India and then installed over here. Because of the monsoon season, we are not able to do it now. We will be able to do it after October only. So it is planned to be done in November, December.
And on the oil side, will that also help oil ramp up from 30,000 to more, or you think we'll reach the peak now?
No. We expect the peak to be higher. All these measures should also help to improve the oil production from East Coast, KG 98.
Yeah, and what is the peak oil you're talking about here?
We have a target of 45,000.
And secondly, in your earnings, if you could talk a bit about slightly lower other income during the quarter, anything you can attribute it to?
See, other income was lower because last year we pumped in about 18,365 crores into OPaL. So that cost, but that much amount went out, and interest rates have also gone southwards. So that has contributed for the reduction in our other income as such.
Okay. And how much is OPaL contributing now?
OPaL EBITDA positive it has happened for the first quarter.
Okay.
Yeah. So it is EBITDA positive. It is around 13 crores.
13 crores. Okay. And what does it take from here for OPaL to better numbers?
From here, one, we need the production to happen. Broadly, that is all that will be required. Now that the plant is running on plus, we expect that it should improve. Its performance should improve, and we should get a better result. Price also. We are also expecting the petrochemical cycle to start an upturn. Prices are looking up, and so over the period of this year, we should expect that it should do much better.
Understood. That's clear. Thank you so much.
Interest rates are also going down, plus cost also, interest quantum also going down. It should help us out of facility.
Understood. Thank you so much.
Thank you. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. The next question comes from Atul Shah from Ambit Capital Private Limited. Please go ahead. I repeat, question comes from Atul Shah. Please go ahead.
Hello, am I audible?
Yeah, you are audible.
Sorry, sir. I'm saying that how much of the gas volume is currently ATM and NWG percentage-wise, and going ahead, how will this percentage change?
Yeah, just one moment. So currently, our new well gas, what we are expecting for this 25-26 would be 2.6 BCM. Going ahead, which would be around 13 to 14% as such. Next year, we are expecting it to be 4.8 plus BCM, which would be around 24 to 25%.
Understood. And sir, my follow-up question is, just wanted to know, like, the arrangement with EPC. Are we doing any other type of arrangements, onshore arrangements to increase production of a smaller well? And do you see any upside there in terms of volume or output?
We do not currently have any other arrangements with BP as far as the production increases are concerned, except for the one that we have at Mumbai High. Coming to other fields, onshore fields, yes, there are many pockets where we could be having additional production, which is possible, and we are continuously doing those things. New well gas, if you see, is there, and the production or the quantum is rising because we continue to look for newer avenues for production in the existing fields also, mature fields also. So it's a continuous process, and we expect that additional oil and gas should continue to flow from these mature fields also.
Got it. Sir, the CapEx guidance for F26 and F27 and a broad breakup of that would be helpful.
Broadly, we would continue 30,000 plus or 30,000 odd, whatever we are doing annually, CapEx, out of which exploration should be 8 to 10,000 crores. We should have our infrastructure projects coming up to 15 odd crores. Drilling should be another 15, less than 15. Drilling should be around 10,000 crores that is happening. And balance some other projects as well.
Got it. Thank you.
Thank you. The next question comes from Ankit Patel from HSBC Mutual Fund. Please go ahead.
Yeah, good evening, sir. Regarding ONGC's investments in OPaL, just also wanted to understand going forward, because there is a significant debt which is there in that balance sheet, and while it is starting to contribute EBITDA, would you also be looking to basically contribute more capital over there to further improve the profit and loss? At the same time, there are also some expansion plans which had come up in the news regarding plans to ramp up capacity under ONGC into the subsidiaries. So would OPaL be also in the mix of all this? Is there any progress or development which you can share on this?
So for OPaL, the debt is around 24,800 odd crores. We do not immediately intend to add any further equity or pump in funds to reduce this debt from ONGC side. We do believe that the company, OPaL, would be able to sustain its existing debt as of now. Now, considering that the petrochemical cycle is expected to look up and the plant is running well. So as of now, we do not have any immediate plans of pumping in any money into OPaL. We believe it should be able to manage on its own. The second part, as far as whether we are looking at any expansions or anything like that, immediately we do not have plans because we are looking at ensuring that this plant runs properly. But yes, it does have a lot of capabilities and capacities available over there as far as land is concerned, or streams are concerned, different streams, gas streams or hydrocarbon streams that are concerned, which could be very beneficial for value-add products to be generated from there. And we would be looking at all these in the future.
So thank you.
Thank you. The next question comes from Kishan Mundra from DAM Capital. Please go ahead.
Hi, sir. Just one question or rather a clarification. So the production guidance that you've given for FY 26 and 27, is it for ONGC standalone or is it also includes your share of JV production?
It's only standalone.
Okay. Understood. That's it from me. Thank you.
Thank you. We have a follow-up question from Vivekanand S. from Ambit Capital Private Limited. Please go ahead.
Yeah, my questions have been answered. Thank you so much.
Okay.
Thank you, sir. There are no further questions. Now I hand over the floor to Sri Vivek Tongaonkar for closing comments.
Yeah, thank you very much, and thank you all for being on this call. And we do hope that we have been able to answer all your questions that have been there. If you require any further information, clarifications, please get in touch with our IRC department. Details, I think, should be available with you, otherwise they are available on our website. So thank you once more, all for joining this.
Thank you, sir. Ladies and gentlemen, this concludes your conference call for today. Thank you for your participation and for using Doorsabha's conference call service. You may disconnect your lines now.